There we go. There we go.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration.
Hi, Dewald. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
Right, legends, welcome to a early live stream today. Let's get the party on the road. Quite a lot to discuss today. I don't have a lot of time. Some other commitments have come up, but I'm here to tell you about the best deals, do some technical analysis here on the price of Bitcoin, speak about market psychology. I also have a question that pops up very often. Okay, there's many questions, but one of the questions that pops up the most often is, Dewald, I've been doing a little bit well in trading the last 2 weeks or 3 weeks. Do you think it's a good idea to leave my job or resign and start full-time trading? So today I want to answer that question. Okay. I also want to discuss, you guys can see over here, right, legends, there's a couple of things I want to discuss. The mindset, right? Have you guys seen this? The psychology, the emotions, okay, the patience that you need in trading, the risk management, how big these two components are to make yourself a successful day trader, and how little the technical analysis actually means, because a lot of people have it the other way around. They think that you need to be very good with technical analysis and then a little bit risk management and the emotions. I'll just tackle that as we go along, right, legends? So you can see psychology, your mindset, your patience, your risk management are the two biggest factors that keeps you successful in this game, and technical analysis is a small part. It's a small part of being a successful day trader. And then I also want to go through this journey over here. Just quickly want to show you guys this journey of how to become a successful day trader, because I want to tackle the question, the question that I get asked the most. I want to tackle in this live stream. We will do some technical analysis here on the price of Bitcoin. And, dare I say, we have broken out. We have broken out. Is this bullish or is this a fake out as per the thumbnail? Up or down? Right? Is it playing with your emotions? Right? What's going to happen here on the price of Bitcoin? We will discuss the high probable scenarios here, do some technical analysis, speak about market psychology, and if you are asking yourself the question, well, I've been doing a little bit well in trading for the last week or month or so, right? Should I resign? And if you do resign, what should you consider before you take day trading on as a full-time career? Because it is a career. It's not we're just going to have fun every day and sit in jacuzzis and smoke cigars and spend the whole day in gym with beautiful women and sexy cars and Ferraris and Lamborghinis, whatever the case might be. I think some social YouTube influencers really paint a bad picture in terms of what it takes to be a successful day trader, right? Obviously, the larger your account gets, the easier it gets. And if you do like, stuff, earthly belongings and cars and things like that, by all means, knock your socks off. Okay. Right, legends, let's do a little bit of technical analysis. Let's go through the comments and say, Hi to the beautiful community. Dewald, I signed up yesterday with weeks with email and phone, but not yet received the future bonus. It is under review, but there is KYC required in brackets. Do I need it? Best regards. No, you do not need to KYC, right? I have been told. Okay, let's tackle that elephant. Let's tackle this beautiful special as per the title in the description. You get $100 for free. Okay, maybe you've been struggling, you've taken a lot of losses, you have not tried out weeks here just as yet. All you need is an email and a password, and you get $100 deposited into your features account to start trading. Practice your market psychology, your trading strategy, or just make some insane gains. Get to keep the money from the profits. But there's only one thing, right? There's one thing that you need to do to get the $100. And this actually gets pretty insane over here, legends. Let me see if you can see this. Yes. Once you've signed up and you've, an email and a password, and you've created your account, all you need is to add a verification method. So if you've used an email and a password to sign up, you would need to add your phone number as well and link it to get that two-factor authentication. So it's basically securing your account. Once you have done that, right, you get, okay, it does say KYC required, right? But you get $100 deposited into your features account. Done, right? And the process does take 24 hours to 48 hours, and then the money will get deposited into your features account. So you get $100 for free. You don't have to deposit anything in your account to get the $100. $100 for free. Then you can go and do your identity verification if you want, and get another $20 for free. And this is where it starts getting really insane. If you do have some money to transfer, if you transfer $200 into your features account and you leave it there for 24 hours or 1 day, you get another $100 deposited into your features account. So potentially, if you go all out, right, you can get $220 just by using $200. You don't even have to trade with it. Or you could say that I don't have any cash to pay into the features account. You will still get $100 only by using the link down in the description. Right, let's go there. Open this up, and this is where I said, right, get $100 for free weeks only by using this link. They've also increased the sign-up bonus to $30,000 instead of the $20,000, and you get that $100 for free plus you still get that insane discount on your trading fees. So Weeks is really going all out for our community, giving us the best deals to offer to you. So if you have not tried Weeks just as yet, I'm not sure what you are waiting for, right? $100. If you're able to deposit $200 into your USD into your features account, you'll get another $100 to trade with. So then you have $200 to trade with. Right, it's an absolute amazing deal here on Weeks at the moment, and link down in the description to qualify for this amazing deal. Right, legends. Now, let's do some technical analysis. Okay, so you cannot sign up with 10 emails and get 1K for free. Unless, well, I suppose, dare I even say if you have 10 different cell phone numbers, maybe you can, right? Maybe you can. Dewald, is that 100 USDT bonus a one-time use coupon, or it's like a trading fees reduction type? They give you the $100 to trade with. It gets deposited into your features account. Okay. And if you turn that $100 into $200, you can withdraw the profits that you've made. Okay. Or you can use it towards stop losses. It depends on what you want to do with that cash, right? Absolutely up to you. Happy to join the live stream, crypto investor. Welcome. Keep the emotions in check, your strategy strong, and your coffee close. Let's win today. What a great saying. Thanks, Mr. Junior. Always appreciate the mods here in the house. Mr. Pac-Man Junior. Who else is there? right? Do we have any other mods here in the house? But I see you guys. I think we've only got these mods here at the moment. Hey, teacher, welcome. I mean, yes, yesterday's live stream was packed with education. And also on yesterday's live stream, okay, I'm not the type of person that goes and brings up the stuff and show you and said, look at what I said and this is what played out. Okay, you can go and watch yesterday's live stream, because every single live stream is jam-packed with education as well. So it's not just Bitcoin technical analysis. There's also a lot of education in terms of how to trade the levels, where to take profits, and why. You know, it's the why that separates the people with power and the people without. Right. Do you know from which movie that line comes from? Do you guys know? It is power that separates the people. No, it is the why that separates people with power from the people that doesn't have power, right? From which line does that movie come from? Because I saw it in a movie once, right? A very, very, very famous movie. Let me know in the comments down below if you know from which movie that line comes from. Okay, and if no one can guess it, I'll give you another clue. Right, legends, yesterday, let's go here onto the 15-minute time frame. Okay, and switch on the weekly levels. There we go. We were talking about this level. Okay, you guys remember, everyone that attended yesterday's class, you know, we spoke about that level over there. I got a couple of people sending me personal messages saying that, Dewald, okay, we closed high time frame candles above the line. Why didn't we move up? It is not what I said. Go and see yesterday's live stream, because I went and I rewatched yesterday's live stream. What I said yesterday is that when you close high time frame candles above the line, especially in the 1 hour time frame, which we did, okay, 1 hour body candle closes above, I said you could still get the rejection, okay, and we hit the TP area to perfection, and I said I will take profits by the VWAP, right? And when you take a Fibonacci from the low to the high at the 382. That's exactly what I said, because I went to go rewatch the live stream. All this does, it increases the probabilities that you are going to claim the high again, even with a retracement. That was the short, and look at what happened. We claimed the highs again. So the probabilities played out. Okay, I got a nasty message from someone, or a snotty, let me just call a spade a spade. I got a snotty message from someone saying that, Dewald, I don't believe that you have backtested this, because we have high time frame candle closes above and we're moving down. Okay, well, why don't you go and backtest it? Why don't you put in the effort, grab an Excel spreadsheet, reverse the price of Bitcoin 3-6 months, and go put in daily, weekly, naked point of controls, and you go and backtest this strategy. Okay, because I have put in the work, right? So I don't appreciate a snotty comment like that, judging what I've said over here, and you have not put in the work, right? So, sorry, I'm not trying to be aggressive over here, but right, legends, the probability played out, and I did say it's a probability. It doesn't always play out, but more, 70. So if I backtested this 100 times, and 72 times out of 100 times when I see this, even with the retracement, you take the high, okay, it still means that the remainder of the time it could potentially not play out. But this was the scenario that I spoke about yesterday, legends. We've closed high time frame candles above. This is where I plan to short, and this is where I plan to take profits. So there was a short. We bounced on the 0.382, found support at the VWAP, and we claimed the high. The probability played out. So based on my back testing, this scenario that happened over here plays out 72 times out of 100 times when I see something like this. So there is still the other 28 times where it won't play out. And this is why we use stop losses. This is why we use risk management. Okay, because if every single trading strategy was 100% guaranteed, I wouldn't have to trade with a stop loss. The reason you trade with a stop loss is because it's just a game of probabilities. And there's always that 30% chance that you will be wrong and then you get stopped out. Right, legends, just had to put that out there. Okay, ignore the haters. You are one of the most genuine people in the sector. Thanks, Curves. I really appreciate that. I just don't appreciate the snotty comments after the fact. If you have backtested a strategy, okay, and you can show me your Excel spreadsheet and say, Dewald, you said this from a backtesting perspective, but my stats show X. Then I'm going to say, okay, we need to have a conversation. Perhaps the market has adapted, because that is something that often happens, is that sometimes the market changes. You need to adapt and change your strategy because the market is ever evolving and maturing. And, you know, you have to think about it like this. If too many people, all of the sardines, or all of the sudden starts trading a specific trading strategy, the market makers will catch on and change the rules slightly. You have to keep that in mind. The market adapts, because if too many people are making profits, you know, if too many people are making money, the rules are going to change so that people don't make money. The market is designed to take your money, and you have to constantly outsmart the market. Not easy. I know, not easy. Right, legends. But let's go into the scenario that I discussed yesterday, because I remember me saying the following. Okay, so let me take the VWAP here out the way. I said, legends, what I would like to see, and I don't always get what I like or what I want. These are the words that I used, is that I don't want to see a fake out. Because usually when you have a big fake out, okay, and you start trading below the trend, it takes the low. Also, from a backtesting perspective, I have found when you have a fake out. So what I would like to see is a rejection by the weekly point of control and by the trend, and I only want to see these two, the wicks left behind. I want to see the retracement, and then I want to see Bitcoin try again, because that is usually a better opportunity to get into a long, right? Because if there's a fake out, price comes back down, and even when it breaks out, it's usually a failed breakout. And because now when you take a fib from the high to the low, it's usually here by the 0.618, you reject, and then you go down. So I actually got what I wanted yesterday, and it's not because I am brilliant and I said so. It's not, it's just it's purely based on technical analysis. And you know, when I see this and then I see a breakout, I'm like, okay, that looks better. Potentially price can grind here against the trend and get upwards momentum. Right, so for now, based on probabilities, I would like price to go and tap a level above, round about $99,300, $99,400, in that zone. In this zone, I would like price to come and tap this level at least before we claim potentially the low, because there's an area of resistance over here, and based on the structure that I'm seeing over here, it does look like price still wants to go and have at least one more move to the upside. And I'm not saying it's just going to reject and fall. I'm just saying I want to see how price is going to react at this level. If it does reject at this level and it comes down, is there bullish signs, bullish CVD for continuation to the upside, or hopefully it smashes the level and it flips the zone into support? That would be great for the longs. Okay, right. So legends, that's basically some of the technical analysis. I'm not going to spend too much time here on the technical analysis. Let me take the comment. I always forget to take the comments out. Right, Dewald, you are the best. Don't let others trigger you. Okay, thank you so much. Yes, I know I shouldn't let it get under my skin, but you know, sometimes you've just had one too many personal messages too much, and then I just have to address it here on my live stream. You know, legends, by all means, I know that I'm not always right, and that is why I trade with stop losses. As a technical analyst, it doesn't matter how good your technical analysis is. There's been many times where I've explained scenarios here on the live stream, and then after the live stream, the price does the complete opposite, and I think to myself, oh, for fuck's sakes. Okay, sorry for my French. And that happens, right? That happens. But, you know, you keep strong, you have your risk management in place, you get stopped out, you analyze the price again, you get back on the horse, and you do the next trade with good risk management. Right? It's just you can't get it right all the time. It's impossible to get it right. And that's why we trade with stop losses. But nonetheless, I wanted to just quickly address that scenario over here. So legends, what I'm looking at over here, let's go here onto the 1 hour time frame. Okay. Unfortunately, we're not out the woods just as yet. But what is interesting is if I take a fib, you know, I want to discuss what's going to happen here. Yes, we can talk about the levels up here, we can talk about the levels down here, but this is today's price action. This is today's range, and we want to be able to long, we want to be able to short, long, whatever the case might be. This is from a day trading perspective where we make our money. Okay, so yeah, we can talk about the higher and the lower levels. If I have time today, there is a scenario from an Elliott wave perspective that I want to discuss, because I do see that there's a little bit of fear. Well, there's a lot of fear in the market where a lot of people are saying this is the top and we're going down. Okay, we're not going to hit this top once again. And right, so I want to discuss that scenario again. But for now, let's focus here in the box for intraday day trading setups. Okay, so legends. We have broken the trend, and currently, as long as price can hold above the trend, there's a chance that we could get another leg here to the upside. So now what I want to do is switch on my daily levels, see if I have some confluence, and also what I want to do is zoom into the structure and take a Fibonacci from the high, from this pivot to the low that we've made over here. Okay. And now this is where things starts looking a little bit interesting. Okay. Also, what I want to do is I want to build some. I'm building my trading plan. Okay. I'm building my trading plan. Currently trading at the point of control. We've already had a deviation below, which increases the probabilities that we're going to the value area high. That's interesting. We also have the 0.618 over here. Okay. This is why I'm saying important resistance, because you could do that and come to the bottom again. Okay, price could do that and go to the bottom. This is why this is an important zone here for me for potential short opportunity, and ideally you would like to see some strength over here. If price can smash through that level properly and flip it into support, it has the chance for continuation to the next level that I'm watching. Daily level 0.88, and boy oh boy, is this a very interesting level. If we do hit this level over here, it really is going to remind me of what happened over here. Exactly what I discussed yesterday, legends. Exactly what I discussed yesterday. Let me take this. So now we know, okay, let me put a little box in here. There is a resistance box that we need to crack right over there. What's also interesting about this resistance, if I go and look at liquidity at that box that I've just drawn, we have liquidity lining up there, exactly at the same level where I've got this red box, $99,000, 500. Okay, and this liquidity is $99,000, let's call it 400, 500. In this zone is where the liquidity lies. So you can see, and usually when price dips into a pool of liquidity, you get a reaction. The question is, okay, and we don't know, and this is why, if you do attempt a short, right? If I had to attempt a short over here, I see the weakness, price falling down, bearish CVD, okay? I ain't leaving the whole position and think, okay, this is where I'm going to take profits. We are going into a bear market and I'm only going to take profits when we hit $30,000. No, you have to take profits when you hit support. That's how day trading works. You short resistance, you take profits at support. You long support, you take profits at resistance. This is how you make money. In case you didn't know. Right, legends. So Wait, I deleted that box. Should not have. There we go. Right. Cool. So now we have that box. Let me take this out the way. And a little bit to the upside. Do you guys remember yesterday when I spoke about this level? Just to do a very quick recap, because I want to talk about this scenario over here. Okay. I want price to reject when it hits the trend at the level. I want price to reject, because then you increase the probabilities that if you do get another breakout, maybe it will be a true breakout here to the upside, or at least a big enough breakout to make some decent profits. Okay. And this scenario now becomes interesting over here as well. Okay. Because when I look at the structure, I just want to put the music ever so softy. Okay. If price does find the strength, maybe it rejects and it comes and it does a retest and it continues to the upside. Okay. I want to take advantage of that short, because remember, as a day trader, we long, we short, we long. Okay. If we do successfully find support over here and we move and continue to move to the upside, I really like this daily level. This little pivot, I like that little pivot. Oh, there's just so much that I like about that level. Do we have a point of control? I want to see something over here. Okay, we have a point of control. This little consolidation areas, oh man, they are magical. Not a lot of people look at them. When price hit this top and it chopped here and then it fell, there's a point of control where the most amount of volume was traded inside that little consolidation area to the top, which aligns with the daily level. And slightly above, we have the 0.88. Now, this is where it becomes interesting. If I zoom out, okay, and I look at this structure, okay, let me take the weekly levels here out the way. Just clean it up ever so slightly. I can even take the point of controls out. Okay, we have another trend with 2 taps. Okay, we have another trend with 2 taps, and one could even argue 3 taps, but I mean, I see this price action as 1 tap. I don't count that as 2 taps, because you want a wave, that's your 3rd tap. Okay, so we have 2 taps over there, like what happened over here. Okay, 1, 2 taps. Then we got the 3rd one, we got the rejection, and then we broke out. Okay, so if we come to the daily level together with the 0.88, what I would like to see is for price to tap the trend, reject by the 0.88, reject by the daily level, like what happened over here, and fall down. If price then finds the strength to break out, that will most likely be your true breakout to the upside. Okay, because once you tap the 0.88, you increase the probabilities of taking the high. But I would like to see the rejection first, then the breakout, because then the next level is the daily level at $104,000, this zone, okay, where we have some nice resistance. You can see how beautifully this line has been respected as resistance, where it's just failed miserably every single time, right? There's resistance here by this daily level. So if I can get what I want, okay, if I can get what I want to see this happen over here. And what will be magical is you will tap the 0.88, which increases the probabilities. If you do get the rejection, you usually go back to the 0.618. Okay, you find support and then you smash the high. Again, okay, if price breaks out directly, then you increase the probabilities for potential fake out if price cannot hold the trend. So if price breaks out and it comes back for a retest and it loses the trend, it starts trading below the trend, you increase the probabilities that you are coming back down, maybe to this trend, and maybe even take this low, right? I don't want to see a fake out. I want to see that happen over here. Because yes, I mean, if you break out here solidly, you can hold the trend. Maybe you form that consolidation area. You have another trend. it forms that bullish pennant, it does not get acceptance back below the trend, yes, then we can continue here to the upside. So I will be watching the price action when we hit that level. Okay, right, legends. Now, that is basically the scenarios that I'm watching. Okay, we have resistance, and that's basically it. And now going back here onto the 15-minute time frame, what I would like to see for bullish continuation, looking at this structure, okay, for price to come at least hit this level, I would now like for price not to get acceptance back below the trend. I want price to maybe chop, okay, maybe it forms that beautiful trend, and that's a bullish pennant, and then it breaks out here to the upside. So if you did not manage to get in at this amazing long opportunity while I was sleeping, I did not get in over here. I actually took some altcoin trades, of which one is AR. I told everyone yesterday about AR. I entered over here on AR, swing failure pattern from the low. Okay, you dip below, you get acceptance back above. I entered the retest, and I didn't have to worry about playing the breakout because I already have a protected position a little bit further down. And TP1, TP2, TP3, I'm out. Maybe I leave 5-10% of the bag open for a moonback to tap this bigger trend here to the upside. But I'm already in an AR trade, so happiness. Right, legends, if I switch on the point of controls, okay, now we have a fresh point of control that formed yesterday. What is interesting about this point of control is that maybe price just still chops here up and down, and if it taps that naked point of control, potential SFP for an amazing entry. Okay, maybe it has a deep one, it gets back up, stop below the low, right, and then it's going to break the trend, so you don't have to play that breakout. You can have a better entry with better risk management if it taps this naked point of control and it successfully finds strength to the upside. The level that I really like, but it's making me a bit nervous, okay, is the range low that I spoke about yesterday. It's making me a little bit nervous. We have a range low over here. There's a range low. You have a pump to the upside, that first low that you make, price chops, and usually what happens is if price comes back down, you get the tap and go, stop below the low, right? It's usually continuation to come and claim the high again. Why this level makes me a little bit nervous is because it's so far down below the trend. If price had to find acceptance, okay, back below the trend, it's not a good sign. It's usually a bearish sign, okay, because maybe you do get the bounce, you hit resistance because now you lost the point of control and it falls down. So there's still a long trade. It's just not the best looking trade. What I will be paying attention to is that sometimes what happens is price moves very fast and very aggressively to the downside. It does that and it leaves a wick behind, and the body of the candle still closes above the trend. But that wick literally grabbed the liquidity, it gets acceptance back above. That is still a bullish sign. So if price can dip into that area extremely fast and it gets bought up very aggressively, and on your 15 1-hour time frames you see the wick left behind, I mean, that's still game on. That is game on. Okay, definitely game on. But I will still treat this as a TP1. I will still treat this as a TP1 if I get into this trade. Right, legends, this is what trading is about. It's about getting in with good risk management and, right, and taking profits, paying yourself. Right, so yeah, that's basically the scenarios that I see here on the price of Bitcoin. Let me go through some more comments. Yeah, CPI data is coming out, so quite a heavy news week this week. I want to see what is happening. Let's do this. Let's see high impact. Let's do the high impact news. So today 5 p.m. my time, which is in 3 hours from now, 3 hours from now, 3 hours, 10 minutes from now, we have testimony from the Fed. Tomorrow we have core inflation. Oh, tomorrow is going to be a hectic day. Tomorrow is a hectic, volatile day. Usually when the core inflation rate, the month-on-month, year-on-year, when this information comes out, it's usually a very volatile day. So tomorrow, please trade safely. Make sure that you tighten up those stop losses. Okay. And Thursday, we've got the PPI. Friday, retail sales month on month. So quite a lot of news and a very news heavy week laying ahead. But like I said, legends, I don't trade fundamentals. I don't trade news. I just trade technicals. Okay, so far, I want to see what CVD is doing. We are building up some bearish CVD. Okay, so there's a chance that price can still range a little bit. There's a chance because I see some bearish CVD over there. Okay. Lower high, higher high on CVD over here, right? And what could potentially happen is maybe it continues to range a little bit longer. Okay, maybe it goes and hits that naked point of control. Maybe it comes and it sweeps up this pivot that I've highlighted. Okay, it does that, and then it gets the momentum to the upside. Right, but based on the local bearish CVD that I see over here, there's a chance that price is still going to find a little bit of more downwards momentum. Right, legends, obviously from a bearish perspective, okay, because I know I'm talking about bullish case scenarios. Longing opportunity, maybe it forms a nice little trend. It doesn't even come over here, it just breaks out. I will be interested over there. Shorting opportunity and then shorting opportunity. But there's also the scenario, okay, where price starts closing high time frame candles below. Okay, let me just put one thing out there, legends. I do still think that there's a high chance in coming to claim these highs before we go down. At least those highs. If we're now talking about the bearish case scenarios where we don't even come here, we just fall down and we come and take the lows once again, okay, I at least want these highs to be claimed. You might be asking yourself, well, why, Dewald? Why do you want those highs to be claimed first? Because if I go onto the 5-minute time frame and I take a Fibonacci from the high to the low, okay, we have tapped the 0.88. Again, take another fib from this high to the low, we have tapped the 0.88. I need to zoom in so everyone can see. Okay, so there's a 0.88 tap from that high, and there's a 0.88 tap from this high, which increases the probabilities that you're going to come and take the highs. And price is now, pumping here. I don't know if it's going to come take the highs now and fall down, right? But I at least expect the highs to be claimed first before we have an aggressive move to the downside. Preferably, what I would like to see, if I go back here onto the 15-minute time frame, is that we at least tap the box above. So, maybe price, maybe it doesn't come to the highs right now. Maybe it still ranges, it ranges. But I would like my box to be tapped for a short to the downside. Okay, at least the box. But I mean, it could literally just swing the highs and then swing failure pattern from the highs, failure to break through, and it finds downwards momentum. So I would consider a short from the highs as well. I mean, it has to be sniper. It has to be done with exceptionally good risk management. But I want my box to be tapped. That's where the confluence lies. That's where the liquidity lies. That's where the 1.618 level, or the 0.618 level is. Okay? There's a lot of confluence. That's also the value area high. Because even from a range trading perspective, when I zoom into this little structure, okay, I take my fixed range from the low to where we are right now. It's just that game of probabilities. From a range trading perspective, when you have a deviation, you usually, mostly, not always, but most of the times, you go and tap the top of the range. So perhaps there's a higher probability to come and tap the value area high before we take the low. Yes. I will stand by that technical analysis. There's a higher chance at the moment to tap $99,486 first before we take the low. Even if it falls down, maybe it does that and then it falls down. But I want this value area high to be tapped first before we take the low. But maybe it's bullish, it finds support and it continues, you know, as per the bullish case scenarios that I've played out as well. Because there's also the extreme bullish case scenario. What if this was? Okay, because it can get really punchy here to the upside. Not the highest probability because of the length of this corrective structure. Not the highest probability. But I want to show you guys something else that I saw on Bitcoin. Okay, there's the chance that this is a 1, 2, and it's going to rock and roll here to the upside. You take your trend-based fib from the low to the high. Just want to work out the most bullish case scenario. 1.618 at $113,000. What if this is a 1, 2, 3? And it just, you know, obviously it's not going to go up in a straight line. You know, it's going to have its rejections and its waves along the way, right? Where there are shorting and longing opportunities on the way up. But I just want to highlight that there is the bullish case scenario where we go and tap $113,000. I think the scenario that carries slightly higher probability is that this is potentially an ABC. Then I'm looking at $106,000. This is why this zone is such important resistance, because you could get the breakout as per, you know, you get that. There's your support. Well, now it's resistance. What if price rejects, comes back down, it breaks back up, it rejects, finds support at the resistance, does an RS flip, breaks out, and then it comes tumbling down again. Right, very important, because this is then an ABC. Increase the probabilities of taking the low, unless it's a running flat. We'll analyze that when we get there. Right, legends, that is in a nutshell what I see here on the lower time frames on the price of Bitcoin. I think I have gone through all the scenarios that I'm currently seeing here on the price of Bitcoin. Right, Hopium, my friend, Hopium. Please know, what do you think about weekly stochastic RSI and MACD? I don't use it as part of my trading strategy. Okay, and I think I actually discussed it in quite some length yesterday during my live stream, is that when you see a larger time frame, like the weekly, okay, oh, it looks like a complete mess. Let me clean up the kitchen over here. Take that out the way. Right, when I look at the weekly time frame and I go switch on the RSI, the problem with the larger time frames is that you might spot bearish divergence. There's bearish divergence. Okay? There's bearish divergence. But when is it going to fall? Because this bearish divergence started forming, okay, in November already. And there was so many trading opportunities. And guess what? It can still go up. And it can still chop here to the upside. And then the bearish divergence will just become more powerful, where you now have more bearish divergence playing out. The problem with the larger time frame, hidden bullish and bearish divergence, is that you don't know when it's going to play out. And then for weeks and days, you sit on your hands and nothing happens. And now you've missed out on all of this because you saw this. And you thinking price is just going to fall here to the downside. Right? Yes, I do acknowledge the hidden bearish divergence on the weekly time frame, but there's still a lot of opportunities that I can take advantage of from a day trading perspective before that bearish divergence potentially plays out. Because there was also a lot of bearish divergence during the previous bull cycle, okay? Between these pivots. Okay, on the weekly time frame, this is where the bearish divergence started. It literally started from, yeah, from this little candle. Okay, there's your high on RSI. There's your high on RSI. Then we made this pivot. Okay, we came back down. There's bearish divergence, right? And then one, 2, 3, 4, 5, 6, 7, 8. 8 weeks later, it played out. 8 weeks. That's the problem with higher time frame bullish and bearish divergence. Even from a CVD perspective, I don't even look at it, because you will be missing so many opportunities. Yes, you could potentially have entered a short over there and just, hope for the best and don't put in a stop loss, and then price fell down here. But guess what? It took the highs again. More bearish, hidden bearish divergence. Okay, so look at this insane move that happened here. Up, down, shorts, longs, you can make lots of money, you find support, you go and claim the highs once again, and only then did the bearish divergence plays out. And that is why I don't like RSI. I don't like to trade the RSI. It's lagging indicators, and I do see a lot of YouTube channels pointing this out at the moment. Woo! Bearish divergence, we should be looking for shorts. They're smoking their socks. Yes, it could play out, but when? That's the question. We could still go and take these highs. We could still go to $120,000, $130,000. Then it plays out. Maybe, I don't know, right? Maybe it takes $130,000, it comes back down, and what if it goes back up again? Like it did over here. Double top, right? 3 peaks, 1, 2, 3 peaks, you fell down, you come back up, you claimed the high again. What if that happens again? So let me take the scribble here out the way. Okay, so I want to take these ones out the way as well. They take a little bit longer to delete for some reason. I'm not sure why. Okay. There we go. Whew. Right, legends. So all I'm saying is I'm acknowledging the hidden bearish divergence. But as a technical analyst, I know that there's still lots of opportunities inside of that range, because you could still go up. Then maybe you come down, you find support above the highs, right? And then you go up for another top. And then you'll just have more bearish divergence on the larger time frames. That's why I don't pay attention to them. I don't use RSIs as part of my trading strategy. Right, legends. And remember, if you have joined the live stream a little bit late over here, there's that insane deal. On weeks, you get $100 for free. For mahala. You don't even have to put money into your features account. Okay, let me take that comment out. $100. They've increased the $20,000 sign-up bonus to $30,000, and you get $100 just for signing up, right? And this is how it works. You sign up and you link an email or your cell phone number. Depending on how you signed up, you have to use another method. So you basically enable two-factor authentication. You get $100. I think it takes 24 hours to 48 hours for them to do the verification, and the admin team and the back office to do whatever they need to do, and then the money gets airdropped into your features account, right? Then to take it a step further, so that's mahala that you get over there. Then to take it a step further, if you then on top of this deposit $200 into your features account and you leave it there for 1 day, 24 hours, right? You get another $100 to trade with. Pretty insane. Pretty insane. If you do want to do ID verification, you get another $20. So $220 if you do want to follow all the steps here. And then, yeah, there's another $10 if you trade volume up to $10,000, right? I mean, it is so easy to trade $10,000 worth of volume, depending obviously on your account size, right? But guys, this is an amazing offer. Make sure that you don't miss out. If you heard me talking about weeks and asking people, go sign up, try it out, and you haven't taken that opportunity just as yet to do a little bit of leverage trading, go and take advantage of this deal. Right. If you don't like weeks, I've also got Bluffin down in the description, where you get the biggest bonuses, and $100,000 get airdropped into your account as you trade, as you would normally trade. Okay, you don't have to do extra trading or overtrade or expose your portfolio to unnecessary risk. As you trade, money just rains from the sky into your account. All you need is an email and a password. These are my two favorite exchanges. But I must say I do most of my trading on weeks here at the moment. Okay, because of the 50% discount on the trading fees, because you also get the 50% discount on the trading fees, and I think it is 0% on maker fee at the moment, and then 50% discount on taker fee. So it's absolutely weeks are like, you know, that they're just pulling out all the stops at the moment. Right. Also, if you'd like to get in contact with our weeks, with the weeks team, we do have a section for them inside of our pro community where you can go and ask them questions. Maybe you have a bug or a suggestion or whatever the case might be. You can go and ask them directly. Okay, cool, legends. Another thing I want to talk about over here is this, which I've briefly touched on. Okay, let me go through some comments. See, morning Dewald, Mr. MT in the house. High time frame CVD is always bullish. Exactly. Okay, if I go and look at CVD here on the high time frame, let's put it on the 4 hour. Let's go look at the 4 hour. And let's zoom into the structure. Look at this. Okay, look at this. One could look at CVD, which is way more accurate than RSI. Way more accurate. From a backtesting perspective, CVD kicks RSI's ass left, right, and center. If you don't believe me, go backtest it. Okay, look at price action, grinding here to the upside. Okay, grinding up, the trend is up, still making higher highs. Look at CVD, absolutely tanking to the downside. Now, if you know the rules about CVD is price goes up, CVD goes down, that equals smart money buying the dips, which equals you're still going to come take the high. Okay, but now I can go here onto the daily time frame. And then you just look at this incredible momentum here to the upside. You can see CVD has just been falling ever since we started the bull market. So it's not really a reliable indicator. Even though it's the most accurate indicator, it becomes less reliable on larger time frames. Because if I look at this CVD, okay, I'm just going to keep on buying Bitcoin. And then you go into a bear market, maybe you go into a bear market, and then what happens with CVD? It just goes down more. And then you're like, but what happened? It looked bullish. Price is going up, CVD is going down. We should be looking for longs. What happened over here? Why did we go down? That is why I don't like CVD or any indicator on higher time frames, because you never know how it's going to play out. CVD becomes more powerful the lower the time frame. Really a lot more powerful. All this actually, you know, if I now have to go and analyze, well, why is CVD aggressively falling to the downside while we're going up? Okay, it's maybe because of institutional interest. More people are getting, you know, becoming aware of Bitcoin. There's more people buying the dips, and you could still, okay, you could still have a bear, you know, looking at the structure on the daily time frame. One has to be reminded of the following fact: 1, 2, 3, 4, 5. What if that's the top? This is 1, 2, 3, 4, 5. Okay, so from an Elliott wave perspective, you can now argue to say that, well, the top is in. Okay, but you have to now consider that this is an impulse. This is not a bearish structure. This is an impulse. What do you get after an impulse? An ABC corrective structure, a 3-wave corrective structure, aka bear market, that makes a higher low, okay, and there's more bullish CVD building up. I can just imagine how CVD is going to tank here to the downside if you had to make a 3-wave corrective structure. You take a fib from the high to the low, you treat this like the 15-minute time frame, you find support here by the 0.618, and then you continue to the upside. Bull market, bear market, continuation to the upside. Higher low, there we go. I'm not scared, legends, and this is what I want to talk about as well. I'm not scared of the bear market, because a lot of people look at bear, or you know, they have that negative connotation with regards to bear markets. And this is why I have green and purple candles. This is the biggest reason I have, because I see purple as my favorite color and it presents opportunities. I see upwards momentum. I see downwards momentum. I do not get scared and I don't get euphoric. Okay, it's just price action at the end of the day. And that red color for some reason triggers the fear responses in your mind, because as children and as how we were raised, red means danger. Stock market, when you see red, it's danger. When people put red on their thumbnails, it represents danger. Blood, stop streets, everything that's red has this dangerous connotation to it. I use purple because it represents opportunities. I can short, I can long, I can short the market from a day trading perspective. Okay, and that is where the psychology comes in. This little thing that I wanted to discuss over here. You have to master your psychology. The tuck between fear and greed. It plays the biggest part in your trading career. You should see red candles. Okay, maybe go and change the color if you don't like red and it represents danger for you. Sorry, I just want to take that comment out, Mr. Alex. Sorry about that. Right? Look, it's like that iceberg that sticks out above the ocean, but the majority of the iceberg is at the bottom. This is now just in reverse. There's the tip of the iceberg over here. That is your technical analysis. It plays the smallest role from an importance perspective to be a successful trader. Then it's risk management. This is why I always hammer on risk management. Then it's your psychological mindset, that tuck between fear and greed, that plays the biggest part, that's going to shape you either into a successful or unsuccessful trader. Right, legends. Also, what I want to discuss, okay, I get this question often as well. And before I dive into this picture, I got the question, good afternoon, Dewald signed up 2 weeks. Thanks, Mr. Goldie Crypto. Hope you get that $100 soon so you can start trading a little bit. Morning, Dewald. Mr. MT, welcome in the house. Warren, good morning from Fort Worth, Texas. Welcome, welcome, welcome. Your thoughts on Hood? I know I've got some altcoin requests over here, legends. I'm not sure if I'm going to have time to go through altcoins. I have to keep the live stream a little bit shorter today. Okay. Can we get 13 more likes to hit that 100 mark? Guys, please. Ladies and gentlemen, do you have a like left in your finger? I would like to have that like in your finger on the screen. Or with your mouse. It would be highly, highly appreciated. Okay, because I'm sharing content here with everyone that you have to pay money to buy in a crypto course. I'm sharing it for free here on YouTube. My live streams are jam-packed with education and alpha. All I ask is that you click that like button. Would be highly, oh, there we go. Over 100, over 100. There we go. Like button is not bearish any longer. Right. Thanks, Mr. Pac-Man. Legends, I got the question, or I get the question quite often, and maybe I won't have enough time to go into the depth of that question today, but I just want to cover it today here because it's a very interesting question, and you might have thought to yourself about the same question. Dewald, I want to resign and do trading full-time. Most of the people that ask me this question have been people that's made it successful for a week or two, or maybe they've had a successful month or two, and then they want to quit their jobs. And then the question is, should I become a successful, or should I become a full-time day trader and just leave my job? Okay, there's a couple of things that I would like to highlight over there. The first thing is, before we jump into this, okay, let me give myself a blank piece of paper. One of the first things you need to do is, from a money perspective, how much money do you have? If you, and I'm just going to use round numbers so it makes the calculations easier. If you need $1,000 a month to live, to pay your expenses, buy food, have a roof over your head, pay your electricity, your living expenses. If you need $1,000 to live off every month, I would say the safest route is that you need a $10,000 account. Okay? You need a $10,000 account, which that gives you 10%. So you need to go and work out what is your monthly expenses, okay? And you need to come up with a number. That number is 10%. And then when you get to the big number, of which this salary that you need to pull every month is only 10%, then you know the account size that you need at least to stay profitable. Because this then means that regardless of which market cycle we are in, whether we are consolidating sideways, whether we are going up in a bull market, or whether we are in a bear market, you need to make 10% every month in order to pay yourself a salary so that you don't have to stress about what you're going to eat tonight. It's a very safe way to do this, is to work on the 10% rule. There are many people that will say, well, why not 20%? Why not 50%? Yes, you will have good months, but you will also have bad months. In a bull market, I can even go up to 50 or 100% on my portfolio in a week or in a month. But then sometimes when price consolidates, or you have a bad month, or it's bear market, or you don't have time to trade, maybe you're going on holiday, or you get sick, you end up in hospital, whatever the case might be, you need the good months to carry the bad months. So if you make 20% one month, it now means that you have 2 months worth of salary. 2 months worth of salary, okay? And if you make 50%, you have 5 months worth of salary. So it's always a good strategy to have an account where you can at least have 10%, which pays you a salary every month from a trading perspective. And the reason I'm using the 10% figure over here is because, generally speaking, successful traders average between 10 and 20% profits per month, depending on the market cycle. It can go up, but you can also have a 5% month. You could also have a break-even month where you make nothing, so that the good months needs to carry those bad months. Right, it's just from a safety perspective. So you first need to see, well, do I have the capital to sustain my salary? First tick. Okay. Then, let me take all the scribble here out the way. Another important question is that, for how long have you been making consistent profits week after week, month after month? And I would say a safe way is between 6 to 12 months. Okay, months. Which basically means, if you are considering quitting your 9 to 5, have you consistently made 10% on your portfolio for 6 to 12 months? What that basically tells you is that, can you pay yourself a salary? Were you maybe not lucky for a couple of weeks or a month, and then the next month you just stuff it up and you burn your entire account? This is where the consistency comes in. This is where you have the experience come in. If you can consistently, of 6 months, I have made $1,000. Every single month, within 6 months, I have made, so in total, I have made $6,000. Okay? Every month, 10%. It can even be more. The higher, the better, right? Between 6, and I would say from, if you really want to be sure, have you consistently made profits for 12 months? Because I can tell you guys now, from a psychology perspective, okay, from a psychology perspective, the journey of a trader, this is one I want to tackle now, is not easy, okay? And this is where some people will now jump off the live stream because they don't want to hear this. It happens, right? Because people just want to make easy money. They don't want to hear the bad stuff, the hard stuff, the difficult stuff about trading. Okay. The hard thing is, when most people start their trading career, And it usually starts inside of the bull market. That's usually when people get into trading, is during a bull market, when they've made insane gains on their altcoin or whatever. They bought a meme coin that 1000x to the upside, whatever your reason is, how you got into the market. There's usually an initial win that made you euphoric to plant that seed in your mind that maybe I can make this work. And this is usually where people ask me the question. Okay, it's not the right time. It's not the right time yet, because now I've discussed the 12 months, the 6 months, how much money. So you might have enough money to sustain yourself, but have you consistently traded 10 to 20% every single month? Not just one lucky trade where you made 200%. Now you're like, well, if I divide that by 12, I have actually made 12 months worth of salary. No. You need to trade for 12 months, and every month you need to show a profit. Regardless of 1 month 100%, next month minus 50%, next month. But you need to consistently show profits, because that's where this is where everyone wins. This is where the question originates from. I've made a little bit of profits. I think I'm consistent. I have enough capital to sustain myself as a profitable day trader, and then the bear market hits. That's usually what happens. This is the bull market. The bear market hits. All those beautiful altcoin buys, the meme coins, whatever you've invested just takes a dump to the downside. And now you realize that, oh shit, I can't actually trade. I thought I could trade. I can't trade. Maybe I have a problem with risk management. Maybe my psychology is not in order. Okay. The capital that I had over here to pay myself 10% every month is now gone. Okay. And this is typically the journey of a trader. Then you go through this drifting phase where you are constantly battling between, should I continue? Should I not continue? Should I maybe go back to my 9 to 5? Should I maybe start up another business? Trading is not, I'm struggling with trading. Okay. And then most people, 95 to 96% of people, this is where they give up. This is where they're out the game. They've made some money, they've lost everything during the bear market, or they realize that they can't actually trade, and this is where they go through that drifting phase between should I not, and then here is where 95% of traders quit. They're out. And this is why we always talk about we need retail to come back. We need the dumb money to come back, okay? Because whoever continued after this phase and stuck it out and had the persistence not to quit, and they actually working on their psychology and their risk management, only that 5 to 6% make it to the next level. It starts to work. You start to break even. I'm so glad I didn't quit, because I wanted to quit many times. I can tell you guys now as well, I wanted to quit many times. Well, fuck this. Like, I just have to express my emotion. Fuck this, it's not working. I've lost again. I've liquidated another account. Can't do this anymore. Okay? And if you can push through those difficult emotions, but you actually put in the work, you start back testing your strategies. You start applying good risk management. It starts working, and you reach a break-even phase where you're not losing any money, but you're also not making money. But you're like, okay, at least I'm not losing. That's a good sign, right? At least I'm not losing. I make $100, I lose $90. I make $2, I lose $5. It goes up and down. And then once you break through the break-even phase, you hit your maturity where you've now mastered your trading strategy. You've nailed your risk management, your psychology, you're robotic about your trades. And that's where the maturity kicks in. And that is where you become a successful day trader. And on average, it is said that this journey from year to year can take 2 to 4 years. So if you are watching the live stream and you only started trading a month ago, the reason you're watching this live stream is because I am trying to show you everything that I have learned over a year. so that I can help you to fast track your trading career so that you don't have to spend 4 years. This is why we have the Legends Pro community, link down in the description if you want to join. This is where we educate so that we can fast track this process for you. Okay, so that instead of it taking 4 years or even 6 years, and I've even read about traders that it took them 15 years or 20 years before they reached these 2 phases. Okay, because they really struggled with psychology, or they really struggled with risk management, or they didn't take it seriously. Okay, 1 week they trade, 1 week they don't trade, then they leave it for a month, then they come back. Okay, whatever the reason is, if you put in the hard work, you can obviously fast track this process. Okay, and that's so. I hope that answers the question that I get from people asking me, can I quit my 9 to 5? I hope that I've answered that question to the best of my ability. Right. You need the account size. You need to have gone through this phase. And you need to be a consistently profitable trader month after month after month. It's fine if you have a 20% month, a 10% month, a 5% month, a break-even month, then a 20% month, then a 100% month. We go into a bull market territory. You go 200, 300% in 1 month, but you need to consistently show those profits every single month, because I can guarantee you guys, okay, it is one thing to make money from a trading perspective while you have a 9 to 5 with that mindset of, if I lose and something bad happens to my account, I have my salary to fall back on. Once you have resigned, that fear starts kicking in terms of, oh shit, if I don't trade and I don't have successful trades, I cannot pay myself a salary. It's a different psychological game that kicks in once you've handed in your resignation letter. That is why it's important to first show the success and prove the success to yourself before you take that step. Right, legends, smash up the like for the education on this channel. Hope you guys have enjoyed it. I have unfortunately run out of time. As always, I hope you have enjoyed the education. Smash up the like on your way out. Take advantage of this week's deal. Up, $100 guaranteed, free money. $200 if you just deposit $200 in your features account. You don't even have to trade with it. You just leave it there for a day. And then $220 if you do want to do the ID verification as well. So you can follow these steps, right? There's another $10 if you just trade, and it will get airdropped into your account. Right, legends. Thank you so much for joining the live stream. I did say today will be a little bit shorter than usual, but as always, I hope you've enjoyed it, because it was once again jam-packed with education and alpha. Have yourselves a great day. Until the next one. Cheers for now.